They're viewing silver as a much more economic metal. And in doing that, they're putting on gold-silver spreads. We saw it last year. We saw it last year 3 different times. We're seeing it again this year. And this year is rather stubborn, meaning they shorted silver, they bought gold.
Join us for a deep dive into the intriguing world of metals and market dynamics with the insightful Lanci. In this video, we uncover the intricate strategies funds employ during times of geopolitical unrest. They turn to gold as a shield against risk while executing pair trades involving silver and copper to hedge economic uncertainties. Vince sheds light on the current metal market dynamics and offers his expert perspective on the potential for ongoing short squeezes in silver. Plus, don't miss his take on the market's anticipation of the upcoming Federal Reserve meeting. Get ready for a unique perspective on the ever-evolving world of metals.
First will be silver, which we actually discussed in Goldfix. We discussed it on Sunday at length. I'm going to give you a synopsis of what we talked about there, which has led to the market doing what it's doing right now. I can't believe it happened so quickly. So let's start with silver. During times of war and times of overseas crisis, sometimes financial, you will see the macroeconomic type funds, the funds that are hedging political outcome, economic outcome, financial risk. You will see those types of funds allocate eventually, after getting their asses handed to them, you will see them eventually allocate money to gold. And they will also, because they believe they are very clever, and sometimes they are clever, they will allocate money into another precious metal in order to mitigate economic risk. So the trade that we all know about is gold versus copper, right? I'm buying gold and I'm selling copper because I believe there's going to be a recession. I'm buying gold, I'm selling copper because I believe there is a war. I mean, I see that there's a war, right? And those trades generally work out for them. Sometimes, more often than not, especially in the last 3 years or so, they're viewing silver as a much more economic metal. And in doing that, they're putting on gold-silver spreads. We saw it last year. We saw it last year 3 different times. We're seeing it again this year. And this year is rather stubborn, meaning they shorted silver, they bought gold. Gold rallied, they shorted silver and bought gold again. So you have 3 layers of people getting into this market. What does that mean? Well, it means that they are of the mind that silver is not precious and that it is industrial. And while its industrial use has increased over the years with, solar and solar panels and silver and EVs and what have you, and phones, it hasn't decreased in investment. It's just increased in industrial. So it's an additional demand. And so they buy gold sometimes, and they sell silver almost always when they buy gold now, and they think that that's a hedge. And eventually they lose money. Now it's hard to time when they will lose this money. Usually I'm pretty good at that. This year, my timing was too good, meaning I didn't think it would happen yet. But here we are, it's a day later and it's happened. So what are we looking at here? Here's some visuals to give you an idea what I'm talking about. This is where it comes from. I'm worried, I'm long stocks, and I'm worried about the economy during this war. And so the CTAs, which are commodity guys, not equity guys, they're not trading equity futures, they're trading commodity futures. And they say, well, let's sell an economic metal, copper, aluminum, zinc, nickel. Look at those red rectangles. It's ridiculous, right? And they've made money doing that, guys. They make money selling copper. They make money selling aluminum, selling nickel. They make money doing that because they sell those things. And even if they don't lose money, they make money because they're long stocks. In terms of, that'll give them the most separation. Economic, this is purely economic, and this is purely precious. And then the smart ones ignore silver. But there's a lot of people that aren't smart out there. And those people will sell silver as a hedge for gold. Now, if you look at the histograms again this week, you'll see that leading into the war, before the war and during the war, the funds, the CTA funds, were actually on the left-hand side here, short gold, but they covered They covered. They had that massive cover on Friday, right? And now the market is up here, and now they're net long. Let's look at what they did in silver during that time. They were short, right down here. Histogram's down there, market's there. They covered. They kicked them out again. Well, who are they? Well, it's the guys that are getting long gold are kicking some silver out. They kick it out. Look at these little jagged edges here. Kick it out, cover, kick it out, cover. Now, the market didn't really hurt them. It was kind of very linear and normal. But on Friday, this came out, and that's a rather steep spike. Now, it's not as big as it was in the beginning, but you shouldn't expect it to get that big, but it's bigger than almost every other one. And given the rally in gold and the increase in gold open interest, I'm telling you, every one of those longs in gold is short silver. All those new longs have shorted silver. And what ends up happening is they sell silver because it works for copper. And here's why they lose so often, because it's precious. If I said this before, I'll say it again. People tend to look at silver as an industrial metal think that it's substituted as an industrial metal for precious. It is not. The industrial demand for silver is on top of the precious demand. And the precious demand for silver is going up. China is an example of that. They may be pulling silver off the market to put it into solar panels, but they're also pulling silver off the market to invest in it because the people taking delivery of it are involved in the investment game, not just the solar panel game. Anyway, what we talked about yesterday was it takes time to make silver rally. And frankly, just to go back to this again, this is pretty big. And what I mean by big is it's pretty persistent. They're being stubborn this year. And it seems like the more gold rallies, the more they buy gold and sell silver. So you're going to see during wartime, gold rally, silver rally, but not as pronounced as it normally does. And then it'll get to a point, and for some reason, they'll get freaked out and they'll cover. They could be freaking out because it's the end of the year. They could be freaking out because the war is getting worse, et cetera, et cetera. But here you have it. Silver's up 1.5% now, was up almost 2%. I want you to expect rolling short squeezes now, not massive short squeezes, but rolling squeezes. And that's because the CTAs are about to get their asses handed to them in silver. They should just stick to shorting copper. Silver is historically, we used to call it the devil's metal. And you can understand why if you're a CTA who likes to play short. So that's the first thing. The second thing is the Fed. This is Fed week, right? Okay, what does that mean? What does that mean? Right, I'm going to tell you what it means. Normally, it's more uncertain. So I'm going to give you some certainty. Futures completely believe the Fed will not raise rates on Wednesday. The odds of Fed funds remaining 5.25% to 5% are 98%. The other 2% is for a cut. Okay, so unless there's an event, not a data point, unless there's an event that changes their mind, they will not change their mind. That's their baseline, okay?
As we wrap up our journey through the intriguing world of metals and market dynamics with Vince Lanci, we hope you've gained valuable insights and a unique perspective on the interplay between geopolitics and economics. If you've enjoyed this video as much as we have, remember to hit that like button and subscribe to stay tuned for more thought-provoking discussions and expert insights. In your ongoing exploration of the dynamic world of metals, always stay informed, stay curious, and may your investments continue to shine. Until our next conversation, take care and make wise investment choices.